I've tested every trading strategy for 7 years. In this video, I'll explain them all, rank them from worst to best, and show you exactly what works and what doesn't. Let's start. Now, one thing we need to understand before we go into the ranking is that any of these strategies here, someone can be profitable with it and actually way too profitable, and others can never be profitable. And what makes the difference here? So sometimes the strategy itself is very important, but what's more important is how you apply it and what level of mastery and what level of experience you have in that specific strategy. So there are some strategies here that I don't agree with at all. However, I still know some people still making money using this specific strategy. So again, this is my experience based on 7 or almost now 8 years of experience when it comes to trading. I've tried most of these and actually much more, but I'm sticking with these, and I'll go over my experience based on these. What was the good and what was the bad, and what do they actually try to say, or what do they claim? So again, there's nothing against this. This is my opinion. You could agree with me and you could disagree. It's not about you or it's not about people. It's about the strategy itself and my experience based on it. So I'll start with what I'm really sure about, okay? Something that I'm actually very confident about and there is not much discussion to do. So let's start with patterns trading. So when it comes to patterns trading, I would say, so if I zoom in here, we have cup and a handle. We have a flag. I do see some of these setups here. And do they actually work? Yes, they do. So for example, a flag is based on the patterns trading. Yes, it is a flag, but it could be found in way other ways of trading. So it could be found in support and resistance. It could be found in price action, in also Elliot waves, in a lot of different ways to trade. However, for me, I would say relying blindly on a specific pattern is not going to work. So looking for this cup and a handle, and then I'm looking for something like this, you would see this all the time and everywhere, but it's about when to take it and when to avoid it and when is it actually valid. This is something the patterns trading is not going to teach you. So you're just looking blindly for a specific pattern. How many times you've seen this? Double top or double bottom, for example, and it could be in 2 different ways. And if you go and you open your chart, how many times you'll see the specific pattern? A lot of times, right? So patterns trading, in hindsight, it might look perfect. You might see some textbook examples, but in real-time trading, it's very hard to actually find valid setups. And it's much harder to actually not see all of the setups because you could see this every time and everywhere. So how can you focus on the valid ones? This is something that is very hard to do here. So that's why I'm going to take patterns trading to, I would say, to C tier. Okay, I would put it as C. Before we continue, I've taken everything I've learned over the past 7 years and put it into one place. It's cool. Inside, you will get the full blueprint to finally make it in trading, including the exact strategy I use every day, the edge model. These are some of the trades I've taken with my members. You are welcome to join if you are ready to make the real change in your trading. Let's continue. Now, let me do Heikin Ashi, for example. When we think about Heikin Ashi, what's the purpose of it, or what's the claim? They claim that, you know, it simplifies or it shows you the trend in a much clearer way. So it hides a lot of the noise. And I see people actually getting almost, you know, if we look at multiple videos showing the same strategy from one person, it could be over millions of views teaching the specific strategy. My problem with it is that it does not show you the real price action. So you could see that here we can see price going up, and you see price did not wick below and price is smoothly going up. And then if you take, for example, a lot of people teaches this strategy is selling here. When this candle closes, you sell here, and then your stop loss goes above. But this specific candle, and then what's coming after, which is this candle here, does not create a wick. But in reality, it could be creating a huge wick to the upside if your stop loss was here, and then continuing lower or maybe going up until, you know, maybe after some time it's gonna print a bullish candle, but you're already out even without a wick. Okay, Here it does not show a wick. So the problem with Heikin Ashi is it hides the real price action, and it just gives you, a more clear picture of the trend. So you could use it for the trend to identify the trends, hold your winners for more reward to risk. You could do that. But as a strategy itself, I would say it's very risky. It fools you a lot, so it does not show you the real price action and the wicks and what happened behind. So if you're just checking this and then you're entering here without looking at your MT5 or your broker account, you could be out, and here you're happy that you're not out because price is going lower. But here it creates a huge wick, takes you out, continue lower, and you're not seeing this. That's why we could put Heikin Ashi at, I would say, D tier. We could do D tier. Actually, patterns goes to D tier as well. I think even Heikin Ashi could be better than pattern trading. It depends on your experience, okay, your level of experience. Now, one thing that I'm pretty sure about is Gann theory. Let's say Gann theory to the F tier, okay, and it's the one, if you ask me here, based on all these strategies, which one deserves the F tier immediately, I would say is Gann theory, and why? Now, before that, it claims that it actually solves the market, or you can trade the market based on time and price and geometry and different type of angles, and then you could predict the exact turning points and you're timing that reversal. The reality is I almost never seen anyone trading Gann theory. So some people would teach it, but you cannot trade it. It's a theory. It's something that you could do in hindsight. You could see, put some numbers together, calculate them, multiply each other, and then you'll come up with numbers. And then when you put the number inside of the chart, where I have a chart doing this, okay, I'll put the numbers and I'll see that, okay, we have a number here, number here, number here, and then here and here. And I can see that, oh, respected here, respected here, respected here. But in real time, and what to do with it, it's not gonna work. This is one of the worst strategies. And if you really want to waste your time learning something that you will get nothing out of, learn Gann theory. So it actually deserves the F. And if there was something below the F, maybe Z or Y, I would put it there. Now, trend line and channels. Now we have supply and demand, harmonic patterns. I think I would start with, I'll continue with harmonic patterns, put it on the D tier. Why? Because very, very subjective and very hard. Imagine I tell you, find this on the chart. So go and find me this specific setup where we have from the X to the A to the B to the C to the D, and you have these specific ratios. It's very hard to find, and it's almost impossible. I would say almost impossible to find this. And then you could actually spot a lot of other fake setups which are not real, and trading based on this, when in reality, what do you notice here? Regardless of the ratios here, it's nothing but same thing. Price going up, coming lower, going up, coming lower. And then it looks like we have a breakout structure here. So it could be simplified in a much easier way. But here it's very complicated, looking at some ratios which are useless. So this one definitely goes to the D tier. Now I want to leave ICT and smart money concepts until the end because there is much more to discuss here. Okay, we have a lot of different views regarding this, and I have been teaching this for a long time, but I want to show you the truth here in this video and show you what actually works, what doesn't, what actually matters, and what doesn't. Okay, now let's look at trend lines. Now if we think about trend lines, I actually blend trend lines with channels. And why? Because trend line is when price going up, respecting levels, but in an angle way. Okay, so it's not a straight line, but it feels like, okay, we're making higher highs and then it's respecting that level with an angle here. The problem with trend line, and even though they work, so I would say they work, and if I was, wanted to price reaching a key level here for me, price broke structure like this, and then we have a trend line, I would take this as a confluence, even though it's maybe 5%, I would just take it at 5% confluence, okay? Then when price goes up, I could look for shorts. Now, this is only 5% confluence, and why? Because I would take it. It actually makes sense that as price was going up aggressively, respecting this, then drops below, but it's reacting of my key level. I have a valid market structure, I would take it. The problem is a lot of the trendline traders that you see on YouTube or anywhere, what they do is price going up, coming lower, going up, coming lower. Now we have a trend line here, we got a reaction. But then after that, what happened is price goes lower a bit, takes them out, or depending on what happened, now we go up. Now we have what? A new trend line. And somehow this could happen a lot of times until we go lower here, and then we do something like this where we have a third trend line respected here and then respected here. The problem is that based on how your mind operates, you have confirmation bias. It's like, okay, I'm looking for trend lines, I will only see the ones that work. So for example, I would only see this. Oh, you see one touch, second touch, third touch, that's amazing. But then you don't see the trend line that you drew from here, the one from here, and all of these different trend lines. These are all losers, and you're only focusing on one winner. And that one winner could be the one that you did not take, because before that you lost 3 times. So that's the problem with trend lines. Even though I can see that partially they work and you could actually make money out of them, okay, but it's not the best one. So I would actually put trend lines on C tier. You could use it, but sometimes it gets very subjective. Okay, that's one thing. Another thing is you could have a lot of different trend lines at the same time and a lot of possible trend lines at the same time. So that's my problem. Now at the end of the video, I'll see if I can adjust this. Okay, so maybe I'll put trend line above, maybe Heikin Ashi, I'll take it after I see the final results. Now indicators, straight to D tier, because there are some indicators that are, they can help you in your trading career. They can be as confluences, and some of the indicators that I cannot trade without is, for example, a moving average. So this should be in my chart 24/7. However, it's not something that I would rely on blindly. So it's not like, people looking for Bollinger Band, and whenever we go out of the bands, then you buy and you sell, or RSI whenever we are above the 70 or below the 30, oversold, overbought, then you buy or sell. It's not like this. I would say if you're doing this, most likely you're going to lose. And in my opinion, there is nothing 100% mechanical that's going to work. You need to apply your experience in order to make something work. When it comes to indicator, you could apply your experience, and if you do that, it might work for you. Okay, otherwise indicator goes to the D tier. Elliot wave theory goes to the D tier as well. So it looks like we have a lot of D tiers. Now, what does it claim? It claims that the market moves in predictable waves. So price, we have a wave, we have a wave, we have a wave, and we have numberings for the waves. And, we always have a wave with different characteristics. And you see here, we have waves inside of waves and inside of waves. So all of these waves could be considered as one, and this is as one, but then we have a lot of other waves inside. And this is where my problem with Elliot wave is. It's very subjective. So you could be looking at this as one wave, or it could be 2 waves, it could be 3 waves. And then when you zoom out into the market in different time frames, you will get more confusion. So it's not, whenever something becomes very subjective and it has a lot of different scenarios, that's the time where it's actually becoming very confusing. So this one goes to the D tier. Now let's continue, and I want to go a bit, to the A, B, and S tier. I think from these we only have 1 or 2 S tier, okay? And I will tell you why. But for now, let's do supply and demand. And I know there are a lot of people trading supply and demand here. Now, what is supply and demand? We're focusing on zones that establishes, aggressive selling or aggressive buying, where in the future we might see a continuation out of. So price goes to the same area, we could have continuation of that. My problem with supply and demand, and looking at all of the other ways of trading, I would say supply and demand is a very, very nice way of trading. However, my problem is with the naming of it. It's not real supply and demand. So there is no proof we have that this is where we had a lot of supply and a lot of demand, or we will have a lot of supply and a lot of demand. It's just a pattern of an engulfing candle, most likely. So if you notice, what do we have here? Engulfing. What is rally, base, and then rally? What is this? That's gonna be an engulfing candle on another time frame. So this supply and demand could be just an engulfing candle. Okay, so just a simple pattern based on an engulfing candle. And what is my opinion in engulfing candle? It could be probably the best candle pattern. I would take supply and demand to, I'd put it on the A tier, because you could be actually trading based on this and become profitable, because you're simply trading out of areas that are valid. So price established, but the problem is what you need to do is validate that specific candle that you're looking at. So we're not looking for every engulfing candle. We're looking for valid ones coming out of valid levels. And then we have a valid range, all of these things. So I would say supply and demand is, regardless of the name, I'm not agreeing with the name, but it could be on the A tier. Now, break and retest, I think this one would go to the A tier as well. And why? It's almost the base of trading. I would say if you're looking for one of the easiest patterns to trade and one of the patterns that could happen at any time frame, any time of the day, in any pair, it's a break and retest. It's a universal pattern, which we're looking for a strong level to be broken. We validate the breakout, we wait for the retracement, and we follow the trend. And this could be part of a market structure as well. So we could see a break and retest pattern, same as market structure. Market structure is breakout structure, retracement, maybe there was another level below, okay? And even here, we break above, retest, and then continuation. So we could see this as just part of a market structure. Now, for this one, the problem and most people losing because they're looking at specific levels. For example, a lot of people looking at the ORB strategy, okay? So the opening range breakout. You're looking at a specific high and a specific low every day. And whenever price goes above, you're looking for longs, and going below, looking for shorts. That's not gonna work. So if I'm breaking ORB here by itself, I'll put it maybe on the D tier, okay? Because just go, regardless of the hype, go and backtest it, and you'll see that most of the time it does not work. Price goes in one direction and then reverses immediately. So we should not be looking for specific high and low every day, or just any high and low. We need to look for valid levels, strong levels. Whenever broken above, we look for the continuation of. Now let's do support and resistance. The problem, and one of the ways that whenever, support resistance was the way most people trade based on, and it was how most people read the market. So we're not like banks, or we have their tools, or institutions, or hedge funds. We only have very few tools that we can use in the market, and one of them is support and resistance. What is support and resistance? It's an area where we have seen multiple times we got reaction off. Now, what do we expect in the future? That there is a high probability, if price respect that, we could look for continuation. Now, when we broke above, this could be a continuation. So this could be also a break and retest. So it's just a way, it's using probabilities in trading. And I'm seeing that if we are, respecting this level twice and then breaking structure and we're still continuing lower, maybe if we come third time, we could respect it. That's the whole premise of support and resistance. It's looking for an area where we had multiple touch, and now based on probabilities, we're expecting another one, or expecting the level to hold maybe one more time. The problem is that when ICT and smart money concepts comes, it's like, okay, we are using the stop losses of support and resistance, and then they're losing, and they were making fun of people trading support and resistance. And I'm totally against this, because if you're learning a way to trade by making fun of other people, you'll never succeed. You need to focus on yourself. So ICT or smart money concepts traders thought that they're trading like banks now, and support and resistance traders are retails, and that's totally wrong. That's why I would say support and resistance, even some of the ICT, even some of the supply and demand traders use support and resistance, because it's a zone where we're thinking based on the probability that is going to work, is going to hold price. That's why it needs to go to, I would say, just because the misuse of support and resistance, if it was me, I'll put it on the S tier, because that's what we have as traders. We only have probabilities. But because of the misuse and because of the how a lot of people actually simplify how to use support and resistance, I'll put it on the A tier. Now let's do Wycoff theory. So what does Wycoff theory says? It says that institutions have a blueprint that we can see based on the volume, based on some specific patterns. Okay, we have accumulation, and we have in this, some of this is also taught in the ICT concepts now. So there is a lot of similarities here. So simply you could identify, that's the claim, you could identify the phases of smart money or the phases of institutions using accumulation, distribution, and then using price and volume. For me, I would say this is way subjective and there is no clear way to trade it. Okay, even though you could see sometime, understanding the theory could help you kind of read the psychology and the behaviors of not only institutions, but the market as a whole. Okay, I could put it on the B tier, but it just, go into C tier because there is no clear way to use it. So it's very subjective, and that's why it's gonna stay on the C tier. Now let's do market structure. Now I want you to think about the tools that we as retail traders have. We could look at probabilities using the lens of support and resistance, and think of what is one thing that almost every trading strategy has. If you ask me, I would say most likely it's market structure. Okay, now market structure, what is it? It's the skeleton of the market. It teaches you, what are we seeing in the market? Are we in a range? Are we in a trend? Okay, are we, what are we doing now? Are we in an uptrend, downtrend? And it tells you where we have a valid range. For me, now is all about finding a high probability range that I can trust. So for example, from here to here, I would go short here. This is a range that I trust. For example, this is a range maybe I will trust to continue short. But here, this range I will not trust. The problem with a lot of market structure, only people who just follow market structure blindly and only market structure, they're gonna focus on these minor swings. And this is where most people lose when trading market structure. But if you try to focus on the higher time frame, not just the higher time frame, but the valid swings, not the minor one, not the ones that came out of nowhere, broke nothing, and then they're very small compared to the previous swings. This is where most people lose using the market structure. For me though, I would put market structure is gonna be our first S tier. In my opinion, market structure, if I wanted to explain one way of trading or one concept of trading, one single concept to a beginner and ask him to follow this specific one, let's say 3 concepts, because you cannot be trading just based on market structure. You could, but it's not going to be as high probability as it can be using some other concepts. But one of the concepts, and probably the number one concept, is going to be market structure, and it is definitely on the S tier. Now we have 3 strategies left here. Okay, we have Fibonacci, we have price action, and then we have ICT. Let's get rid of price action. So price action, I'm talking about pure price action. You're reading how candles behaves around specific level. What do we have? Rejection, we have momentum, we have a specific type of candles, and this is simply reading price action with nothing, no indicator, just pure price action. And you could be using candles patterns, you could be using price patterns, like the one that we discussed earlier. So I would say this one, I'd put it on the B tier. Now, price action is a very general thing to actually explain. So you could, perform the pure price action in too many different ways. Now, the last 2 we have ICT and we have Fibonacci. Let me start with Fibonacci and put it just as, it's a very simple tool. However, it makes a big difference when combined with other tools. You cannot be using it by itself. So you're not going to be using just Fibonacci everywhere and by itself. No, it needs to be blended with other things, and it deserves the A tier. Okay, if you ask me what is one thing that you're gonna blend with market structure and you're gonna be one of the best traders, it's gonna be keeping it simple using market structure and Fibonacci. Okay, now ICT and smart money. Okay, now you might ask me, what is the difference between the two? So what is ICT and what is smart money concepts? ICT is the name of the person who created this way of trading. Even ICT is the inventor of smart money concepts. But then nowadays, it's understood that ICT is the pure way of trading price action based on ICT, and smart money concepts, as of now, it's known as the simplified way. Students of ICT studied the ICT concepts. Okay, so we have ICT. Here's what ICT actually teach. But then here, ICT students. So ICT students came out and then try to simplify things and simplify ICT. And now, what is my problem with this? It's not that it does not work. It's about the cult behind it. It's about the premise. It's about the promise as well. The promise is that you're going to be trading like institutions and you're going to be trading like banks. And now you're trading against retail traders. That's a big claim. And that's, as you realize a bit, it's a funny claim. Even when I was trading ICT and also teaching ICT, I never claimed that you're going to be trading against retails, because you're still a retail trader. You're not going to be trading like banks because we don't have a tool that they have. So all of these things, ICT itself, the way or the patterns that ICT is teaching, in my opinion, they do work. So if I'm looking for this, sweep, what they call sweep or fake out, or price creating a higher high and then breaking below the low, this could a lot of the time go lower. Okay, but what is this? This is just pure market structure, and a lot of the people trading pure price action also use this. But now we have new namings to it. We have liquidity sweeps, where banks induced buyers here and then trap them here. And then we have the displacement going lower. We have the market structure shift, where banks broke below the last low. And now we have the imbalance, where only sellers were there, which is mathematically wrong. It does not work. So we have the fair value gap, and then price goes lower. I agree that this actually works. So if you can notice, and if you go to the chart, it works, not 100%. But the problem is that the promise behind it, that you're going to be, this is how banks work. When in reality, they don't look for an imbalance, a trade-off, and then they look for a breakout structure. That's not how they work. Banks do not trade like this, okay? So that's a very false promise. And then the number of concepts that ICT and smart money concepts have, there is a huge number of concepts. And even if we consider a single price action leg, so if I can see that price was going up, and then we have this main range, okay? Now we have the 2022 mentorship model, which we have sweep and the breakout structure. The problem is that anything can happen from here. So if you're telling me here that price is gonna go up and then go lower, you're probably wrong. Why? Because anything could happen. We could go and then create, we have an imbalance here. We have an order block here. We have liquidity here as well, okay? We have a breaker block here. And we have a lot of different things. And we have some other fair value gaps here. Price could go here and then reject. Price could go here and reject. Price could actually inverse this and then continue higher and go to the order block and then react. Or it could go to the order block and react. Or it could actually sweep the high and then go lower. Or it could run the high and continue higher. Is that a trading plan? What is the level that I'm looking to enter off? There's nothing clear. So there are about here in this situation, I would say maybe 10 different scenarios. And then you pick the one you want. But then in hindsight, and after this happened, what are you going to say? That, okay, this fair value gap is inverse here. Now, yeah, sometime if you have experience, you could identify which one is going to be valid. And I know a lot of people make money off this. And even when I was teaching ICT concepts, You know, I was being profitable and I was making money. The problem is the claim. And when you try to apply everything, it's going to be confusing. So which one is going to work? You're not really sure. A disclaimer here. I'm not saying that there are a lot of people trading based on ICT and smart money concepts are not profitable. I would say that if I'm introducing someone to trading, what will I ask him to study? And what will I ask him to trade based on? Definitely not ICT. Why? Because it's gonna give him a lot of fake promises, a lot of I would say unrealistic expectation. It's like, you know, you're gonna trade like the banks, and then finally unlimited confusion. So for this reason, I'm gonna put ICT on the D tier. Okay, now what could I adjust from here? I think this is the final, and I'm really satisfied with this. Now my advice to you is, if you are trading based on ICT, stick with it. If you're trading based on Elliot wave, stick with it. If you're trading based on indicators, stick with it if you were profitable. So my opinion does not matter to you if you're already profitable, but if you're still not, and you want to look at something that based on my, you know, experience that works with me, I would say go with market structure, maybe supply and demand, maybe break and retest, support and resistance, Fibonacci, price action, and avoid the ones below. So avoid Heikin, Ashi, avoid Gann theory, patterns trading just based on patterns. And yeah, now sometimes patterns trading is gonna work when blended with support and resistance. For example, indicators could be working when blended with support and resistance and Fibonacci. But I'm talking about you know, every strategy here is getting the rating or the ranking just based on the single concept itself, not when blended with other concepts. So that's it for the video. Hopefully you learned something new, and hopefully this helped you here. If the video was helpful, then make sure to hit the like button, subscribe to the channel, leave a comment, check out Edge School. That's my community where I do actually trade with people and then give some classes. That's it, and I will see you next one.